Hey guys, it's Dan here. In this week's episode we will talk about artificial intelligence in finance. So in this video I will show you 5 fields in finance where artificial intelligence already plays a huge role. Ladies and gentlemen, let's get started. First field in finance which uses a lot of artificial intelligence is called high frequency trading. So let's talk about high frequency trading in a second, but first of all, what is the definition of artificial intelligence? What does it mean actually? Well, artificial intelligence means to teach a machine to solve a problem and learn alone. The alone is very important because this is what makes the difference between a smart machine and a stupid machine, you know, the learning alone and solving problem. By the way, high frequency trading is also called algorithmic trading for a very good reason. And to give you 2 examples here, first of all, we have a hedge fund, which was the first to introduce it a few years ago from Hong Kong, which is called IDEA. So they use only artificial intelligence in the hedge fund to do their decisions. And you also have a software which is called Kensho, which is now part of the S&P Global Group. And they help banks and hedge funds to become big AI players and to use that technology. So now let's talk about high frequency trading. How does it work? Well, basically, first of all, the first ingredient for high frequency trading and for artificial intelligence is always data, and in this case it's big data because it's a huge amount of data from different sources. For example, economic sources, social media, weather, finance, and so on. And then all this stuff goes live, so it's updated every second and goes into a software. And this is where the magic will happen, because this software has been programmed by programmers and data scientists and so on to analyze the big data very quickly, to learn from it, so meaning learning new patterns, what is new, what was not the case before, and these kind of things. This is where it's so powerful actually. And then after it has analyzed and learned, well, to act. So what does it mean? It means that the software, once it has analyzed and learned, it will either buy, sell, or hold an asset, for example, and it's gonna happen on it's gonna be connected to financial markets. So, for example, if the big data tells the software and the AI behind that now is the time to buy a specific stock, then it will automatically buy this stock. But it can also, of course, it can be also on the bond market or on the currency market, or hedging sides or reducing risks, for example, with derivatives. I made specific videos about all these things, so I will not waste your time with all the details. If you want to know more about these things, make sure to watch my video about this one, link in the description below. But what is the goal of all this, and what is the power here of artificial intelligence? Well, it removes the human from the chain, and it removes all the human interactions out of the chain. So first of all, it's gonna be cheaper, of course, because you don't have to pay traders and these kind of things. But also, and probably even more important, it takes out the feelings. You know, usually when there is a crisis or something like that, a trader, which is a human being, will act on instincts, maybe sell because there is fear, or buy because you are very bullish, you know. And the machine learning will take that away and only base buying, selling, and holding decisions on the big data and what they have analyzed and learned. So this is a very, very useful tool in hedge funds. All the big hedge funds use it right now, all the investment banks and all the companies which are doing high frequency trading. So why is it high frequency? Well, because actually the decision here happens let's say every second, because the goal is to win on price gaps. This is pretty simple to understand. Imagine you are shopping for a plane ticket. Imagine when we were back then when we were buying plane tickets. And imagine sometimes there are little differences between one website and the other. That's kind of the same process here. And the goal is to make money on the little differences on the little price gaps actually. And of course, the margins are super thin in this business, but that's why they have to do high frequency, meaning buying, selling, holding all the time to make money on these little gaps. Let's talk about the second field that uses a lot of AI in finance, which is Robo Advisors. You probably heard of Robo Advisors. It's much more, let's say, down to earth, because the high frequency trading is for very specific firms. You will not have access to them, but the Robo Advisors, everybody, even if you have $5, you can invest in them. So let me explain what a Robo Advisor is. Well, as you can imagine, it's kind of a robot that will help you guide your financial decisions, and they will basically do the financial decisions for you. So let me explain. To give you two examples, you have a lot of companies out there, but I wanted to point out two. For example, you have Betterment, the company that is very straightforward and shows you exactly what they're doing, or even more simple, Beanstox, which is super simplified investing without doing anything. And I'll show you how it works actually. Again, we are starting with data, and in this case, the company, for example, Beanstox, they will ask you some basic questions at the beginning. For example, about your goals. Do you want? What do you want? Why do you want to invest? Do you want to save? Is it for your retirement? Is it for something else? To buy a house or whatever. So first of all, they will ask you about your goals. Then they will, of course, ask you your personal information, how old you are, and stuff like that. And then, of course, about your risk profile. How much risk are you willing to take? This is very important. Then, of course, with all this data, it will go into the AI software. And here, with the machine learning, and especially with what is called clustering, the software will create a portfolio for you. What does clustering mean? Clustering means actually the machine will classify you compared to other investors. Let's imagine you are 25 years old, you just came out of college and these kind of things. You have, let's say, $50,000 of income and these kind of things. It's going to cluster you on a map, and it's going to group you with others, and this will help the software to design a portfolio that works best for others that are similar to you, basically. This is what clustering means. And so in this case, once you have agreed on all that stuff, the software will buy a portfolio for you, and usually it's going to be an ETF, exchange traded fund, which are very cheap, very affordable, very tax efficient as well. And let's say if you have said, yeah, you want some good risk because you're young, and in this case, let's imagine it's going to put you a portfolio out where you're going to be 80% stocks, 20% bonds. And this is basically how Robo Advisors work. And in my opinion, it's a great way to invest without knowing how to invest. Third financial field where AI is used a lot is credit decisions. In this case, it's all about the question, who should get how much loan? That's a big question for every bank, for every fintech company that is lending money. So the idea here basically is, imagine if I am the fintech company, my goal is to find you and to know how much I should lend you, because you have a certain risk, and depending on your risk, I will give you a better or a worse interest rate and more or less money depending on what your goal is, basically. So the idea behind the credit decisions made by AI is that it should minimize credit default risk. So when I'm lending you money, my goal is that you are not defaulting on your payment. So that's good for you, and that's good for me as a bank, for example, or a fintech company. The idea is also to find potential clients that have not been found so far. Let's say all the underbanked people who do not have bank accounts and these kind of things. And the idea behind all this process, it should be faster, more reliable, and more efficient than without AI in this case. To give you two very prominent examples here, one is called Ant Financials. It's a Chinese fintech. It's the biggest in the world. They wanted to do their IPO in China. It's a long political process over there, but super prominent company. And then you also have Zest Finance, which is getting big as well in AI and in lending, in the lending game basically. So how do they operate? Well, imagine this is the fintech company which has the software and the AI. Let's for example, this would be Ant Financial here. They would find candidates out of a huge pool of data, so suitable candidates. And on the other side, once they have found these candidates, the software company would sell this data to the lenders and the banks who are willing, of course, to lend money to people who have a certain risk and a certain appetite for credit, right? So, and how does this company, let's say Ant Financial, make money? Well, basically, they are selling the data to the lenders, and the lenders will send them a tech fee, which can be let's say 1 or 2% of the loan or something like that. So this works super well, and here AI basically is very helpful. Well, to be faster, more reliable, and more efficient in the credit in the loan application process. Number 4, where artificial intelligence is used in finance, is with a smart chatbots in banking. What are chatbots? Maybe you don't know the name, but you probably discussed with one of them. It's like in your online banking platform, for example, sometimes you will not talk to a customer service representative, a real person, but to a bot, which is kind of a robot. And this is kind of a tricky one here, because the idea, of course, from a bank perspective, is to replace the call center, because of course you don't have to pay a bot. The bot is never sick and never goes on vacation, of course. But the idea basically is to replace humans with chatbots, and in theory it should be faster, more reliable, and more efficient, because it's true that most questions can be answered pretty quickly by these bots. That being said, I'm not a huge fan, and I think this is probably the field where there is the most work to be done, because let's face it, I mean, bots are usually pretty bad. When you talk to, usually it's much better to talk to a real representative than to a bot, because the bots right now are pretty much useless in my opinion. But again, AI is learning fast and is learning alone, so let's wait maybe 1 or 2 years, and I'm pretty sure that the smart chatbots in banking are going to be much better in the very close future. Number 5, in finance, where AI is used massively, is a field I have no clue about it. It's pretty new for me. It's called RegTech. So what is RegTech? It's regulation technology for compliance. Sounds super fancy because it is, but it's super helpful and actually helps banks, insurance companies, and even governments behind the scenes. So you don't see that stuff, but it's pretty useful. What is happening actually? Well, of course, it's very useful after a lot of financial scandals and all these things. And I think the best way to understand how it works is to look at a company called Promontory. And Promontory has been acquired by IBM. They do a lot of big data analysis and a lot of artificial intelligence, data-driven decisions to fight, for example, money laundering, which is super important for banks, or fraud detection, or these kind of things. They're using machine learning techniques to look for things that look very unusual and very different from the rest of the pack. Let's imagine all your clients are here, and you have an outlier on very far away, then it looks pretty much like a fraud, and a question should be asked. Same question with money laundering. So actually, RegTech is on the rise, and it's a super interesting technology. It really happens behind the scenes, so that's why I didn't know what it was. But I will keep my eyes open for this one. And well, now you know the top 5 actually where AI is really changing finance. I wanted to ask you, what do you think about AI and finance in combination? Do you think it's a good thing to have companies like in compliance, or especially Robo Advisors who help you to invest if you don't know how to invest in these kind of things? Is it trustful or not? Would you trust these companies? Do you have experience with them maybe? let me know in the comment section below. Otherwise, I wanted to tell you that I post once a week every Sunday. So if you like corporate finance, market finance topics like this one, make sure to subscribe for more content. It's always high value, or at least I try to do my best to give you high value. Make sure to like if you like that kind of stuff. Enjoy your week, stay smart. See you soon, guys. Bye bye.